A very good afternoon, everyone. Sumit Bihani, on behalf of Seva Sutra, take an opportunity to manage this meeting. So this is a seminar organized by webinar on CSR organized by Seva Sutra. Seva Sutra is a specialist research and advisory consultancy firm working with corporates and NGOs. It works closely with the clients involved in corporate social responsibilities to chalk out well-structured and CSR strategies. It regularly assists their clients in identifying social organizations for their CSR activities. So CSR is something which which is being practiced in our country since ages, but post in the Companies Act era, it has been made mandatory for a class of company, for a certain class of company. So we have a galaxy of speakers who will educate us about this topic or would enlighten us about the topic. So today we have Mr. Amit Gupta, Mr. Ramesh Patodia ji, Rupanjana Deji and Pankaj Virmani ji. So I take an opportunity to introduce them. So I would first of all introduce Mr. Amit Gupta. Sir is a practicing CS based out of Lucknow. Sir has been practicing for last 20 years he has in the area of corporate and allied laws, and he is expert in providing out of the box solution to the complex issues. Sir holds a diploma in banking and finance, and at the same time sir is a insolvency professional also. Post that we have a session of Ramesh Patodia ji. So sir, so Ramesh sir is practicing chartered accountant based out of Kolkata, and sir has been practicing for last 36 years, mainly in consultancy, litigation, both in direct as well as indirect tax and FEMA. Sir has authored several books and had shared his views on taxation impact on CSR. Followed by sir, we have Rupanjana Deji, who is a practicing company secretary and a qualified lawyer. A ma'am is a qualified independent director, also a teacher, a trainer, as well as she has authored many books. Most importantly, she's an expert on CSR. So she'll be taking a session on assessment tools. Followed by the session would be followed by Pankaj Virmani ji. So sir is an associated with DLF Rental Business as a company secretary. Sir is a member of the expert committee of auditing standards of ICSI. He will be guiding us on corporate world issues. So I'd like to start the session, and I request Amit Gupta ji to please take the session forward from here. Thank you so much.
Thank you, Sumit, for giving a long introduction, and thanks to Seva Sutra for giving me this opportunity to share some of my learnings with all of you. We have expert speakers, Pankaj, Ramesh ji, Rupanjana ma'am. We'll have a interaction towards the end of the session, wherein we will be able to take up the critical issues from the participants and will be addressing. I am given the responsibility to take you through the journey of corporate social responsibility from a legal and regulatory standpoint. And 20-25 minute time to the Herculean task to complete this entire journey. So what I'm going to do is I'm going to touch upon some of the important aspects with regard to the corporate social responsibility, presuming the basic understanding we all have with regard to the legal provision, else we'll not be able to complete our deliberation in 20-25 minutes time what is allocated, and will be short by the time available for the discussion. I want more and more time to be allocated towards the discussion. So the first point that I want to touch upon is with regard to the applicability of the corporate social responsibility provisions. This provision has undergone a significant change since inception. Originally, the provision was worded little differently. Circular was issued to give a clarity as to which number of years you have to consider for the purpose of checking the eligibility threshold. So section 135(1), which deals with the applicability part as to which companies are required to comply with the provisions of corporate social responsibility, that is dealt by 135(1). And those companies which qualify in 135(1) are mandated to comply with the rest of the provisions, including 135(5), which mandates mandatory expenditure towards CSR at the rate of 2% of average net profit. So which are these companies on which the provisions is applicable? So the criteria is your net worth should be 500 crore or more, turnover 1000 crore or more, net profit 5 crore or more. Now the law is during immediately preceding financial year. So let's say we are talking about financial year 21-22. If a company has qualified and became and is having a net profit of 5 crore, let's say during the year 21-22. So for which year company is required to undertake CSR is the first doubt that professionals are having many times in the mind. So answer is very clear, because the language that is used in section 135(1) is preceding year. So now preceding year becomes 21-22, and you are required to spend minimum 2% during the subsequent financial year, which is 22-23, starting from April 1, 2022 and ending on 31st March 2023. You will be required to spend the quantum as is discovered as per the provisions of 135(5). Now, this is a very simple provision. You will calculate your net worth of 500 crore. You will calculate turnover of 1000 crore or net profit. And net profit here is net profit before tax calculated as per the provisions of section 198 of the Companies Act, along with the definition what is provided in the rules. You have to consider that as well to determine this particular eligibility. That is one common mistake that I can say corporate all across have been doing with regard to the eligibility itself. The second part we will come little later, but eligibility itself, many people are doing a mistake, like companies are having a profit of 5 crore during 21-22. So they believe that they have to spend 2% average net profit during 21-22 itself, which is not the requirement. The requirement is that you have to do in subsequent years. Secondly, the net profit calculation that they are doing is incorrect in as much they are just taking a profit what is appearing in your financial statement without making adjustments which are required as per the provisions of section 198. So 198 calculation is required in terms of managerial remuneration calculation also. So you have to take a profit before tax from the financial statement, add or subtract the items what are covered in 198, whatever is arrived, you have to subject that money, that amount to again the definition what is provided in the rules with regard to adjustments regarding the dividend from received from companies which are in the compliance of 135 provisions, and the profits that you receive from outside India. That is one part. Now, the problem that is coming in way of understanding this implementation part is because of the Rule 3.2. Now, Rule 3.2 is worded in a manner that once you trigger the provisions of corporate social responsibility, then there is no option then to exit unless you continuously go out of the purview of section 135(1) for 3 consecutive financial years. So let's take the example what we have taken. The company ABC Limited was having a profit of rupees 10 crore during the financial year 21-22. So for 22-23, it will be required to undertake CSR. And what will be the amount? That will depend on the profit that is there in 21-22, 20-21 and 19-20. Average of these 3-year profit will be taken and 2% threshold will be calculated. Now, once you read this provision 135(1), this understanding is clear. But as you travel to Rule 3.2, which mandates that once you qualify to the requirement, you will be ceasing to do CSR only if you disqualify for 3 consecutive years. That is, in 22-23, let's say you are in losses. Common misunderstanding which crops up in many of the corporate houses and the professional is, if I have a loss in 22-23, I am not required to do CSR in the subsequent year, that is in 23-24, because 135(1) says in the preceding financial year. But we have to read this provision along with the Rule 3.2 as well. And Rule 3.2 says once you are in the purview of corporate social responsibility, then your cessation will be only when you disqualify the conditions for 3 consecutive financial years. That means 22-23, 23-24 and 24-25. If all these 3 years you are out of purview of 135(1), then you will cease to have the obligation of CSR in terms of the provisions of section 135(1). That is the catch point that we have to consider while we are advising to our client. Second issue which often is being asked by the corporate houses and especially the NGOs who are a Section 8 company, that if I am a trust or society and I am doing charitable objects only, I am not required to undertake any CSR, as the CSR is an obligation only in respect of corporate. Non-corporate entities so far are not covered for the purpose of CSR. Now, as I form a Section 8 company and I qualify to the criteria specified in section 135(1), am I required to do a CSR or not? Answer is very clear. There is no exception, because the language used in section 135(1) is every company. That includes a Section 8 company also. Few people have the argument that if I am a Section 8 company, then where comes a question of a profit? There I have an argument where if you go to the provisions of financial statement definition given in the definition clause of the Companies Act, you will find out the answer. And the financial statement definition in case of a Section 8 company includes your income and expenditure statement as well. And same explanation has been provided in the Schedule 3 as well. So if we read all these 3 things together, then you will realize that there is no carve out for a Section 8 company as well, and you are required to undertake the corporate social responsibility obligation if your entity qualifies in the provisions of section 135(1). So you have to read 2 clause 40, Schedule 3 along with section 135(1) to understand the applicability in case of a section 8 entity. Another aspect which requires some of the deliberation in respect of changes what the government has done with effect from 22nd of January 2021 and the clarifications what the government has issued thereafter. The challenge is 135(5) was providing that company will be required to undertake CSR at the rate of 2% of the average net profit, and this amount is required to be spent each year by the corporate. And the provision was comply or explain. If you have the obligation of 2% spending, so you have to spend that money or you have to explain in your board report. That was a provision. Starting from 22nd of January 2021, that is the financial year which are closing on or after 22nd of January 2021, were obligated, the companies were obligated to compulsorily spend this amount. And if this amount was not spent, then you have to check whether the amount that you have earmarked, whether that is for the ongoing project or it is other than ongoing project. For a moment, we park this point, whether what is ongoing and what is other than ongoing. We simply understand if a CSR project is ongoing, then I have an obligation to transfer this money within 30 days from the close of respective financial year in a separate bank account to be opened with the nationalized bank. Whatever amount remains unspent, let's say you have the obligation of rupees 10 crore, you have spent 5 crore during the year 22-23. So by 30th of April 2023, you are under an obligation to transfer the balance 5 crore to a separate bank account opened with the nationalized bank, and this amount will be required to be spent in the next 3 years period. And if you fail to spend this money within the next 3-year period, then this amount will be required to be transferred to the funds which are specified in the Schedule 7. And those are 4 funds only: Prime Minister National Relief Fund, PM CARES, Swachh Bharat Fund, and Clean Ganga. Either of these 4 funds, you have to compulsorily transfer the balance unspent money if you fail to spend that money within the period of 3 years from the close of the date of transfer. Now, if your project in which you have spent this, if you have to spend this money is other than ongoing project, then you have a 6 months window available, and in that 6 months window, you have to transfer this money to a fund what is specified in the Schedule 7. Schedule 7 again specifies these 4 funds only. So if it is ongoing, you have to transfer within 30 days. If it is other than ongoing, you have to transfer it to fund directly within the period of 6 months. Now, questions are there that after 31st of March, can I use the money towards the CSR? Let's say I could not spend the money during the respective financial year, but now I have got the opportunity before reaching to 30th of September 2022. Do I have opportunity to transfer this money for the purpose of some CSR activity? Answer is no, because the obligation is created on 31st of March in respect of whatever amount remains unspent, and you have a liability to be transferred, the amount to be transferred to the respective fund. You don't have an option in case of ongoing project or in case of other than ongoing project to utilize this for any other purpose. In case of ongoing project, if you want to utilize, then also you have to first transfer the money to separate bank account. From there, you have to withdraw the money and use it for the purpose of doing CSR. The only advantage with the ongoing project is that in case of ongoing project, you get a window of 3 years to spend that money further. Otherwise, you have to transfer this money within the period of 6 months to the funds what are specified in the Schedule 7. Now, we park the point with regard to the ongoing project. Now, there is no qualification as to what will be tantamounting to an ongoing project and what will not be an ongoing project. Ongoing project essentially means a multi-year project which is having timeline not exceeding 3 years, excluding the year in which the project has commenced. So 3 years is the outer timeline, and your project should cross the respective financial year in which the project was started. Let's say a company has initiated the project in the month of February 2022, and project is scheduled to complete in June 2022. 30th June 2022, the project is going to complete. Though the period of project is less than 1 year, can we say that the project is ongoing project? To me, answer is very clear. The project qualifies all the conditions, ingredients of ongoing project. It has started in one particular financial year, and the closing date is beyond a particular financial year, that is closing on 31st of March 2022. So you will be entitled to qualify it as an ongoing project, and the benefits what are available in respect of ongoing project, that you have a window of 3 years available, that window will be available. So there is no criteria as such with regard to capital nature, with regard to some specific nature. Answer is no. There is no as such criteria which is required to be qualified for qualifying as an ongoing project, that it should be of capital nature. When you are planning any expenditure in capital nature, then only it will qualify. It is not like that. You have to just see whether this project is crossing one particular financial year or not. If it is classified that way, of course, your board and your CSR committee must have classified it as an ongoing project for the purpose. Then only you will be able to take the advantage of that. Another important aspect is with regard to the CSR expenditure that is required to be done, where the FAQ number 7.4 issued by the Ministry of Corporate Affairs comes in a picture. Before that, I will take the provisions with regard to the implementing agency, which has undergone a change. Now, implementing agency is an important tool for implementation of corporate social responsibility. Why it is so? Because though the responsibility has been casted on a corporate to undertake a corporate social responsibility. Why? Because the corporates have a different style of functioning, and the government has presumed that with their innovation, with their systematic approach, with their technology, with their professional mindset, they will be able to bring innovation in the reaching out to the last mile peoples in the society. So that was the concept. But implementation is purely and purely not possible by the corporate standalone. So they need to take the help of a implementing agency. Implementing agencies are either a Section 8 company or a society or a trust. which are having a certain specific parameters. Now, to curb the malpractices what were going on, the government has tightened the requirement with regard to the implementing agency. Now, implementing agency has certain prerequisite, and prerequisite of course involve you have to be registered as a Section 8 entity, or you have to be registered as a trust, you have to be registered as a society. These were earlier also, now also they continue. Now, one more added requirement is there that your Section 8 company, trust or society has a 12A registration under the provisions of income tax, and you should also have a 80G registration. Though it is a different debate that why 80G has been added, it is beyond my understanding. I think Mr. Patodia is taking care of the taxation aspect. I'll ask a question to him to address this, why 80G has been mandated, because I am not able to at least understand as to why 80G has been added, because 12A I can understand. Objective is that if CSR contribution of ₹100 is made to a Section 8 entity, entire ₹100 should be available for spending towards the CSR. That is the objective. If 12A is not there, only ₹70, that is 100 minus ₹30 tax, will be available for CSR. So government wanted to ensure that all the entities which are doing a CSR, entire corpus is available for the purpose of undertaking CSR. So 12A is laudable and understandable. But 80G is a benefit which is available to the entity who is donating money. The corporate who is contributing a money to a Section 8 entity, if they have a 80G registration, the donor will be entitled to claim the exemption. No exemption, no benefit is coming to a implementing agency as such. Then I fail to understand what could be the logic as to why they want the 80G registration to be there. I believe it is inadvertent, because 80G and 12A registrations go hand in hand. So the person who might have recommended from the Ministry of Corporate Affairs side to make these changes, in casual approach, these changes might have been recommended that 12A plus 80G registration will be required for these. But to me, it looks a little impractical as to what advantage it will give to the Section 8 entity and what disadvantage it will give if 80G registration is not there. In any case, the benefit is to the donor. And when taxation provisions are understood, it is quite clear that if you are contributing towards CSR, except two funds, that is PM CARES and Prime Minister National Relief Fund, other contributions you will not be entitled to any of the 80G advantage. The corporate even will not be entitled to any of the advantage. Then in that backdrop, it is difficult to understand as to why this benefit will come. Now we come to the clarification what FAQ 7.4 issued. The FAQ was that if I make a contribution of required amount to the implementing agency, whether it will be considered as spending in terms of the provisions of Section 135(5) or not. So the law has evolved over a period of time. Considering the malpractices what the corporates were following in many of the areas, the government has tightened the norm by way of issue of a clarification, and they are saying that mere contribution to implementing agency will not be considered as CSR. So if I contributed 1 crore rupees towards the implementing agency and implementing agency has not spent any money during the year, then the money has to come back to the corporate, and corporate in turn will be required to either transfer it to separate bank account if it is ongoing, or transfer it to a fund which is specified in the Schedule 7. Now here comes certain challenges also, certain difficulties also. I'm sure because these are the difficulties what the corporates are facing. I'll request Pankaj ji to cover up this aspect as to what kind of challenges he sees which are being faced by the corporate by virtue of this deterrent provision that has been mandated by the Ministry of Corporate Affairs by way of issue of this circular, as to what are the practical challenges which the corporates are facing. But the law is very clear that the government has mandated that you have to be careful while you are transferring the money to the implementing agency for the purpose of spending. And if you are not sure whether the money will be spent during the particular period of time, then you have to release the money in the tranches. Then only you will be allowed. Otherwise, you have to take the money back and then do the appropriate treatment in respect of that money. Another change that government did in respect of this particular CSR spending only, where we were doing excess spending, because CSR is not something which will be done on a match to match basis. Let's say I have budget of 10 crore. I may spend something over also. Maybe I have spent 11 crore because it is depending on the requirement from the society. So let's say in a particular year, if I have spent excess money on demand of the corporate, now the government has allowed the carry forward of excess. So this 1 crore excess will be allowed to be carried forward for set off in the subsequent 3 financial years. So if I have done the expenditure in 21-22, 1 crore extra, I'll be allowed either I can take partly or fully in 22-23 or in 23-24 or 24-25. After that, this money will lapse. That is considering the demand what the corporates are having. Now, there is one more question which participants keep on asking is regarding, can I spend the money beyond 2%? If yes, to what extent? Can I spend beyond 5% also? Answer is yes. Of course, you can spend what you want. But if you are doing a contribution to a fund, as is covered under the provisions of section 181, you have to be mindful that you will trigger the approval of shareholder in terms of the provisions of section 181. So you will be required additional compliance to take the approval of shareholder before spending that money as well. I can take a few more issues which are with regard to the definition of corporate social responsibility as such. Now,
sorry to interrupt. Like, if we can, if time permits during the Q&A session, we can take few things because actually.
Surely. So I think I'll stop over here and maybe we can take up the questions little later. Yeah, all right.
Elsewise, if the time permits, during the question answer session, we can elaborate on few more things.
Sure.
Thank you so much for understanding. So we have our next speaker already available and ready. So Ramesh ji is over to you, sir, for your kind deliberation. Sir. Thank you, sir.
Thank you, Sumit. Thank you, my fellow speakers. Thank you, Seva Sutra, and all the participants in this important webinar, which is on CSR. Friends, I am dealing with the taxation aspects of CSR. And when I look back, CSR is something which is there since, I think, ages. It is definitely older than the 1922 Income Tax Act, I think. Because all of us remember the word called dharmada. And in several court cases, dharmada which is being charged as a part of the invoice. In the invoice, dharmada used to be separately charged. And the question came up before the Honorable Supreme Court that whether this dharmada is an allowable expenditure or not. And it was held to be allowable expenditure. So that was something which was in the context of something which was being done voluntarily. It was not mandatory. But now we are dealing with CSR, friends, which has been introduced in the form of Section 135 of the Companies Act 2013, when the 2013 Act came. And as rightly summed up by Amit ji in the time frame which has been given to him, the broad framework of the provisions of the Companies Act 2013, as per which the certain class of companies are required to spend about 2% of their net profits compulsorily towards the CSR. And when the provisions were originally introduced, there were no penal provisions as such, as he also explained. It was only that you have to explain that why you have not spent the amount which you were required to. But now, this 7, the company is in default in complying with the provisions of subsection 5 or subsection 6. The company shall be liable to pay a penalty of twice the amount required to be transferred. So this is a onerous responsibility, I would say, that if a company does not spend the amount which it has to spend on the CSR, the penal provisions of Section 135 subsection 7 are applicable not only on the company but on the every officer who is in default. He is also subject to penal provisions. So in the background of these provisions of Section 135 of the Companies Act 2013, we have to see the taxation provisions which are there under the Income Tax Act 1961. The Income Tax Act 1961, as we all know, that Section 37 of the Income Tax Act deals with the residual clause, where the deductions which are not available under any of the other provisions for computation of income from business and profession is concerned. If there are no other provisions, then Section 37 is the residuary section which deals with such other kinds of expenditure. And therefore, if there was any section under which the CSR amount could have been claimed as an expenditure for computation of business income, it was Section 37 of the Income Tax Act. And what did the lawmakers do? The lawmakers inserted one explanation to the said Section 37, which was inserted by the Finance Number 2 Act of 2014 with effect from 1/4/2015. That is from assessment year 2015-16, where they have said, I'm reading the explanation, for the removal of doubts, it is hereby declared that for the purposes of subsection 1, any expenditure incurred by an SSE on the activity relating to CSR referred to in Section 135 of the Companies Act shall not be deemed to be an expenditure incurred by the SSE for the purposes of business and profession. So by this deeming explanation which was inserted, it is being said that it is not an allowable expenditure under Section 37 of the Income Tax Act. And therefore, since the introduction of this explanation in 2000 from assessment year 2015-16, we are now in assessment year 2022-23. A whole 5-6 years have passed, and I don't find much litigation before higher courts or Supreme Court on this point, friends, which I will deliberate that what are my viewpoint. But plainly speaking, any amount which you have spent towards CSR under the mandatory provisions of Section 135, they allowable under Section 37 of the Income Tax Act 1961 while computing the income. That is the law if you read in a plain and simple manner. However, if you read the memorandum which explained the introduction of the said provision, the memorandum itself says that though the deduction is not allowable under 37, but if there is any provision under Section 30 to 36 of the Income Tax Act in which the same expenditure can be claimed as an expenditure, then it will be allowed. Like Section 35 AC or Section 35(1), where the payment is made to, say, Scientific Research Association, or 35 AC is now no longer there, where there used to be a national committee which approved the projects. So if you are incurring any expenditure which is eligible for deduction under these Section 30 to 36 of the Income Tax Act, then it can be claimed as an expenditure. Which brings out the dichotomy, so to say, that one corporate who chooses to spend on a project which is covered under Section 30 to 36 is getting the benefit of deduction, whereas another corporate who is not doing so is not being allowed to claim this under Section 37 of the Income Tax Act. And this dichotomy, friends, was pointed out by the high-level committee also, which was constituted by the Government of India, which submitted its report in the year 2019, where they pointed out that according to us, there should be a uniformity in the manner in which the deductions can be allowed while computing the income. And it should not happen like this, the way they are doing. Another point which is of importance is that whether the amount which you are paying under CSR, can it be claimed under Section 80G of the Income Tax Act or not? There is no direct, I think, bar as such, except that in Section 80G itself, insofar as contribution to Clean Ganga says, or there are two funds, if you make any contribution to that, in Section 80G it is specifically written that if any amount is contributed to those two funds out of the CSR amount, then it will not be eligible for deduction under 80G. So the way the tribunals and courts have interpreted that when such is the wording of those two subsections, that means that if any other payment is made which is not to these two type of funds, then that will be eligible for deduction under Section 80G of the Income Tax Act in case it is a CSR expenditure. So this is broadly the provisions of Income Tax Act which is existing now, friends. But when I go deeper into this, friends, when I look into the other aspects of this whole CSR levy, what I find is that CSR is something which has been mandated by the Companies Act 2013. Companies Act 2013 deals with how a company has to function. Everything which deals with the corporate world. The manner of calculation of the CSR amount is linked with Section 198 of the Companies Act, where net profits, how the net profits will be calculated, and thereafter, after you have arrived at the net profit as per Section 198 of the Companies Act, 2% of that amount will be the amount which you would be required to spend on CSR. Therefore, up to this, there is no Income Tax Act in picture. For calculating the amount of liability of CSR, Income Tax Act doesn't come into picture at all. It is not based on your income, it is based on your net profit, and that too calculated as per the 198 of Companies Act 2013. In such a situation, friends, what I'm asking myself is a question: can Income Tax Act deal with something which has been mandated by Companies Act 2013. Income Tax Act, the power is only to levy tax on income. Under 7th schedule of the Constitution of India, the taxes on income are levied by virtue of entry number 82 and 85 in the 7th schedule of the Constitution of India under Article 246 of Constitution of India, where the central government has got power to levy taxes on income or taxes on corporates' income. So, in such a situation, when 2% is mandatorily required to be spent by me out of the net profit which I have earned under Section 198 of the Companies Act, can it be said that that 2% is forms part of my income? That is the question I am asking myself. Because you see, the explanatory memorandum which introduced Section 37(1), there it says that it is an application of income. The amount, why they are not allowing the amount, they are saying it is an application of income. But friends, in my humble submission, it is not an income at all. Because something, when it has not come to me, before it has come to me, it has taken out, I will say. 2% is mandatory. It's a kind of a levy, friend, introduced by the government of India by virtue of companies. This is the situation, friends. My opinion, it is all. This is not an income at all. Then there is no question of any deduction at all under Section. I will directly reduce it from my income. And in this respect, friends, I find a very old decision of Honorable Supreme Court of India reported in 41 ITR page 367 CIT Sita, where Honorable Supreme Court was in a situation that where in what situation an item will be application of income or it will be a charge against income. And Supreme said whereby obligation income is diverted before it reaches the. So I want to say that CSR is an item which is diverted even before it reaches me, and therefore it doesn't come into the definition of income at all. When it doesn't come into the definition of income at all, then there is no question of allowing the deduction or not allowing the deduction, friends. There is another decision of Supreme Court reported in 82 ITR page 580, where Supreme Court was dealing with allowability of coal cess, which was also based on a percentage of profits of annual profit of last 3 years. And this was a decision in the context of 1922 Act, where Honorable Supreme Court held that the coal cess which was levied as a percentage of profits was an allowable expenditure under Section 10 of the 1922 Act, which is pari materia to Section 37 of the 1961 Act. So therefore, friends, in my opinion, the CSR amount being has to be mandatorily spent. It is not forming part of my income at all, and therefore question of claiming it as a deduction under Section 37 or for that matter under any of the provisions of computation of income from business and profession concerned does not and cannot arise. It has to go out simply as not being a part of income. That kind of a reasoning I have not yet found in relation to CSR. It has not yet gone into the courts and before any of the courts or Supreme Court. But I am hopeful that this kind of interpretation, this kind of reasoning is definitely going to go before law, and the Section 37(1) insofar as say the purposes of business I will wind up my discussion. I just want to point out one more thing, which is an important thing, that Schedule 135, Section 135 of the Companies Act, which deals with the various provisions relating to CSR. One of the subsection of Section 135 says that endeavors should be made to spend the amount of CSR in the area where the company is functioning. That is not a compulsory condition as such, but they have given a guidance in Section 135. If that be so, if I am spending something in the area where I am working, there are a number of decisions where when CSR provisions were not there, and the courts have held that this is an allowable expenditure, it cannot be disallowed. So going by that interpretation also, this cannot be said to be not an allowable expenditure. It has to be, in my opinion, it has to be allowed as an expenditure. That this is, as far as Income Tax Act is concerned, there is some dispute going on regarding the GST also, that whether any expenditure which you are incurring on CSR, whether input credit relatable to that will be eligible for being allowed as a input or not. Though there are few decisions of authority on advance ruling. In one of the decisions in the case of Polycap, I think that company in that case had supplied some switchboard and gears, and it held that no, it is not an allowable expenditure because it is not for the purposes of your business. And on that reasoning, the input credit was not allowed. Whereas people say, those who are opposing it, the argument is that of a mandatorily required to be spent, then it has to be, but for it has to be for the purposes of business, and therefore input credit is to be allowed. So that's all, friends, as far as taxation aspect is concerned. Thank you.
Thank you so much, Patodia ji. So now we have Rupanjana ji, who would be speaking on tools to measure. So ma'am, it's all up to you now.
Yeah, am I audible?
Yes, ma'am, perfectly audible.
Okay. So first of all, I would like to thank Seva Sutra for organizing this master webinar on CSR, because there are so many aspects to CSR. Like we have already seen, the compliance aspect, as Amit Gupta ji has very exhaustively defined, and the taxation aspect, which although may not be present, Mr. Patodia ji has taken us through in quite detail. And I believe we are also going to listen to the corporate experience of CSR from the next speaker. So my session, I would like to have focus more on. It's a session on impact assessment, the assessment tools of CSR. Of which, as of now, only one tool, which is the impact assessment, has been introduced mandatorily. The others are more or less only in the planning stage. So I would like to take the participants through this. Now, first of all, I would like to talk about CSR audit. So CSR audit is not mandatory. We all know that as of now, CSR audit is not mandatory, but it has been in planning and discussion stage, even with the MCA, for a long time. Now, initially, the idea was, the question was the kind of audit that MCA is thinking about introducing in CSR. Will it be a CSR compliance audit, or CSR financial audit, or, what kind of an audit would it be? So I would have guessed at that point of time that it would be a combination of financial as well as compliance audit and some elements of social audit, because it is important to measure the social impact of the projects, the social development projects undertaken by the company. So I would have guessed that this would be the CSR audit. But the line of discussion that is going, towards from the MCA side, it seems to be going more towards the social audit. side rather than the financial or the compliance audit. Now, as for the compliance audit part, now we know that the form CSR2 has been implemented, and all the declaration and the reporting by the company is now being done by the CSR2 form. The MCA can actually, sample check companies whether they are doing the compliance or not. So even if the compliance audit is not there in terms of compliance with law by the companies with respect to CSR provisions. So this sample testing will be done in my understanding. I'm of the belief that it will be done, and AI will be introduced to check the compliance by companies. So this will also involve the financial aspect also. But we now know that social audit is already being introduced. That the social audit that is being introduced is a little different from CSR audit, because now this has been proposed by SEBI, and this is more in line with the stock exchange, the proposed social stock exchange, and listing by the companies who are doing the social entities, or rather the implementation agencies. The companies that are implementation agencies now, but of course for-profit companies also can list in those stock exchanges if 67 up to 60 more than 67% of their activities relate to social welfare. Now that is a separate topic. It may be kept for another day, but then of course the point I wanted to bring here is that the social audit is already going to see the light of the day soon. Now what about CSR audit? So CSR audit as of now is not really mandatory, it's not in the provisions, but many companies are doing it voluntarily. Now, why and how is the companies are doing it, and how is it important, and why the companies are thinking that it should go for voluntary CSR audit? So I will discuss on that. Now, starting from the recently introduced penal provisions, we can see that a company which has not complied with the complied with the legal aspects of the CSR with respect to transfer of unspent amount. Let's say, just a simple example, a company is left with let's say 15 lakh of rupees as unspent. So if it is for ongoing project, the company has to transfer it to a special bank account opened with a scheduled bank called this unspent CSR account of the company. By 30th of April, it has to transfer, and the amount that has remained unspent as on 31st of March. So from 1st April to 30th April, there is no point, there is no question of using that money. That has to be transferred in the bank account. And when it relates to a non-ongoing project, within the next, from 1st of April to 30th of September is the window, the 6 months within which the company may transfer. Now, this window has been given. I mean, there is basically no logic for giving this window, because if you are not transferring this money to the unspent CSR account as an ongoing project, that means it is not an ongoing project, and you have no option of spending it within that 6 months. So I would say my understanding is that because this CSR2 form is to be filed with the annual filing by the company, which is essentially after the the AGM of the company post 30th of September. So because the company's annual filing will be done post 30th of September, so this provision has been, so this 6 months has been given so that this compliance can be made before the annual filing starts. So that is my understanding, but basically I don't see any logic why, in case of unspent amount which does not relate to an ongoing project, so such a huge time frame should be given, because in any case you cannot spend that amount within that 6 months because it is unspent with respect to the earlier year. So there are a lot of things to discuss just on this topic, but I would like to restrict my discussion here because I have a lot of other things to discuss. And so when a company, this company, the example that I was taking, that the company has, let us say in any case, whether be it ongoing project or non-ongoing project, it has to transfer its money to the scheduled bank within 30th of April, or to the any fund within 30th of September. So, but it has not done. So if it has not done, then the company will have to pay penalty, and the penalty will be twice. It might be twice that amount of shortfall, which is 15 lakh in this case. So twice means 30 lakh or 1 crore, whichever is less. So this company may be required to pay a penalty of 30 lakhs for not, transferring this 15 lakh. So now take the example of companies, let's say a particular company which was not aware or, about what it should do, and they knew that 15 lakh is the shortfall, and they were somehow got confused with the provisions, and they spent this 15 lakh between 1st of April to 30th of April. I have been some clients who thought it like that, and they came back to me and they said, okay, we have complied with the provision by 30th of April, we have spent that 15 lakh. Now, in this case, it still is a non-compliance, because the requirement was to spend before 31st of March. Now, a company, if the company would have, gone for a voluntary CSR audit, or, a consultant doing the internal audit of the CSR during the year, the company would not have defaulted in this. So it has spent 15 lakh of rupees, but that is non-compliance. So it will be required to now pay a penalty of 30 lakh, which means it is ultimately ending up paying 45 lakhs of rupees. So this is what basically CSR audit, can bring to companies. It can save money of companies, if you are approaching a professional. And by the way, this is also a very good scope for professionals to, venture out as a professional area of work. So CSR internal audit or CSR compliance audit, CSR in the form of secretarial audit, whatever, because CSR audit has not been prescribed, its form has not been prescribed. So just go for it. I would suggest both corporates and professionals to go for it, and this will save a lot of penalties. So that is how CSR audit is, can help companies. But then, of course, there are certain provisions in the CSR law also, which shows that, CSR audit is probably suggested, even if not implied, even if not mentioned in expressed terms in this, in the law, it may be definitely be implied. Now I'll take you through a certain provisions. Sub rule 3 of rule 4 of the CSR policy, CSR policy rules, which says a company may engage international organizations for designing, monitoring, and evaluation of CSR projects or programs as per a CSR policy, as well as for capacity building of its own personnel. So if I am engaging an international organization for designing, monitoring, and evaluation of CSR projects, so this does not mention whether this evaluation has to be done before the project is implemented or after the project is implemented. So if it means after the project implementation, this definitely talks about CSR audit in implied terms. Now, rule 5 of sub rule 5 of rule 4, the board of a company shall satisfy itself that the funds so disbursed have been utilized for the purpose and in the manner as approved, and the CFO or the person responsible for financial management shall certify to this effect. The CFO shall give a utilization certificate. Now, how is a company going to give the CFO of a company going to give a utilization certificate without satisfying himself or herself that the money has been actually properly spent as planned? So this calls for an audit. Once again, an implied CSR audit in the rules. Now, sub rule 6 of rule 4 says that in case of ongoing project, the board of the company shall monitor the implementation of the project with reference to the approved timelines and EROI's allocation, and shall be competent to make modifications, if any, for smooth implementation of the project within the overall permissible period. Now, how is the board of a company supposed to know, what is happening with the implementation of the projects? Now, how can it monitor if that is not something like in the nature of an audit? Ultimately, that is also audit. So another implied audit. Then we have sub-rule 2 of Rule 5, which says the CSR committee shall formulate and recommend to the board an annual action plan in pursuance of a CSR policy, which shall include the following. Now, what the list of CSR projects or programs that are approved to be undertaken in the manner of execution of such projects or programs, the modalities of utilization of funds and implementation schedules for the project, monitoring and reporting mechanisms for the project, details of need and impact assessment, if any, for the project undertaken by the company, provided that the board may alter such plan at any time. So as we know that, this annual action plan has now been made mandatory, and it has also to be put up in the website of the company. So unless a company is aware of what exactly is going on with its CSR project, it cannot, devise an annual action plan, and it cannot, monitor it. It cannot evaluate and, change that action plan based on the need and impact assessment done. So this is another case where this, implied CSR audit we can see. Then sub-rule 3 of Rule 8, we have every company having CSR. This is about the impact assessment that is already been made mandatory, and we'll talk about that later. So these were briefly the areas where social CSR audit seems to be implied by MCA, and I would guess that yes, CSR audit is coming in whatever form. It may be a combination of financial and compliance and compliance of law, I mean, and social audit. It may be a combination, and who is going to get that kind of an audit is also something very interesting to see, because as chartered accountants, company secretaries, professionals like us, we would also like to be involved in the process. So now what are, if CSR audit is introduced, and even if it is not introduced in the voluntary CSR audit that is being done, now what are the things that are the what are the parameters to look at by the person, by the auditor? Community development that is taking place by implementation of the project, fair working conditions, concern for environment, whether that project shows any concern for the environment, international relationship, market practices, fiscal responsibilities, transparent accounting, and financial practices, and regular monitoring. So these are certain parameters that CSR audit includes. Now, the participants may be aware that CARO 2020 has also been, implemented, and from this year, it is required. The CARO report has to also, mention the CSR activities of the company under clause 20 of the CARO 2020. It is mentioned that the clause A says whether in respect of other than ongoing projects, the company has transferred unspent amount to a fund specified in Schedule 7 to the Companies Act within a period of 6 months, etc. And clause B says whether an amount remaining unspent under the clause subsection 5 of section 135 of the Companies Act pursuant to any ongoing project, the earlier one was non-ongoing project, this is an ongoing project, has been transferred to the unspent account. So the auditor has to report on these also. So this obviously is an audit requirement by the financial auditor, and so this is already there. Now, advisory has been issued by ICAI to its members in respect of the responsibility of auditors while they are doing the CSR audit. Where while they are reporting the on the under clause 2020. So what are the responsibilities that ICAI has asked its members to take care of? The activity, the project undertaken is within purview of Schedule 7. It has to be checked. If mere contribution donation is given, then the same is specifically allowed as per Schedule 7 only, which means in any one of the funds, because otherwise donation is not allowed. So donation to any NGO, any orphanage, any school, etc., has been specifically barred. The MCA has always mentioned that donation of any kind other than donation to the funds mentioned in the Schedule 7 and this PM Cares Fund are not allowed, are not CSR. So then separate disclosure of CSR expenditure is made as per Schedule 3. That also the auditor has to check. Expenditure on the project is made as per company's CSR policy rule 2014. The company is complied with applicable accounting standards in accounting recognition and disclosure related to CSR spending. Auditor has complied with relevant auditing standards on auditing, which is SA 250. Consideration of laws and regulations in an audit of financial statement, and SA 720 revised, which is the auditor's responsibility related to other information. Now, the auditor is required to comply with the guidance note on audit of expenses wherever a company has undertaken the CSR activity through a third party being eligible, the section A, interest or trust or society, etc. Then report utilization of such CSR funds from the auditor or CA of that implementation agency must have been taken by the company. This is required to be checked by the auditor of the company. Now, the third party has spent the funds on CSR activities as per Section 135 of the Companies Act and related regulations. Verification of the CSR spend has been done as per the guidance note on audit of expenses by ICAI and etc. So there are detailed, detailed guidance issued by ICAI to its members who will be auditing the financial statements of the company. So with respect to the CSR part, what are the things they have to keep in mind while auditing has been already given by the ICAI. Now, coming to audit stages, so what are definitely generally the audit?
I'm so sorry for that, but actually we are overshoot time, ma'am.
Yeah, so what do I do?
Because so I believe Pankaj is also waiting for the deliberation, and we have only 40
the other speakers took more time. That's why I have not completed even the first one.
Please try to wrap up in next 5 minutes.
Yeah, okay. So what I'll do is I'll just skip the CSR audit remaining part. I'll go to the CSR implementation impact assessment. So as we know that impact assessment has been introduced in the current, the latest amendments to the CSR provisions, and impact assessment is now mandatory for companies which have a total CSR outlay in a particular year of more than 10 crores. And so there are three conditions actually apply. One is the total outlay is more than 10 crores. A particular project is more than 1 crore, and that project has completed more than one financial year. So in that case, that particular project has to be mandatorily has to go through impact assessment. And it has not mentioned who can do the impact assessment, but essentially it can be done by professionals or firms. Big Fours are already doing it. 5% of the total CSR spend can be spent towards impact assessment by the company. And there are difficulties, I have many difficulties of impact assessment and, how to measure impact assessment and all, so I just run you through how to do the impact assessment. This is by benchmarking one's business against others, by employing a firm of professionals for impact assessment, by measuring social return on investment, by, seeking recognition for CSR practices as best practices awards, KPI, having KPI for CSR, and then getting ISO 26000 certification for CSR. So these are some way of, ensuring impact assessment, but the detailed guidelines are awaited from MCA. And we have two types of impact assessment, voluntary and mandatory. And voluntary is, of course, those projects which do not meet the three criteria I just mentioned. And for mandatory, it's mandatory. Now, there are a lot of benefits of impact assessment. I'm skipping that. And I'm coming to three other assessment tools. One is the Corporate Responsibility Index, which was developed by UK's Business in the Community BITC, a charitable institution. Now, it's an index given to every company based on its annual financial in the annual financial statements. This index is given. It is based on the social activities that it has done. I'm just briefly saying that. I'm going to the next one, social return on investment. That is another new new way of calculating return on investment based on your social projects that the company has undertaken. And then CSR rating, of course. Now rating agencies are gearing up to start rating. So that is another new assessment tool that is expected, in future. And then, of course, CSR standards, the ISO standards has introduced the ISO 26000:2010, which is guidance on social responsibility. So that was released in the West in 2010, and India it is called IS 26001:2020. So it is really new. So a company can go for that rating also. It has 5 types of ratings, 1 star to 5 star. 1 star is the basic level certification, and 2 to 5 stars is the advanced level certification. So these are basically the assessment tools, and we can discuss, if there is any query, we can discuss in detail. Thank you.
Thank you so much, ma'am. We have Pankaj waiting, so we can start our deliberations.
No worries. Namaskaram. Thank you, Seva Sutra, for giving me an opportunity. And after hearing the 3 learned speakers, Amit, Ramesh, Patodia ji, and Rupanjana ma'am, I don't think I'll have anything to left. They've already spoken at length about various issues, which I thought that I'll be talking about it. But having said that, I'll briefly touch upon in next 10-15 minutes on a couple of important issues. You see, this is not a first program that some of us are speaking on, or many of you are attending on CSR topic. Now the question is, why is it getting momentum so much? We need to understand that when we talk about CSR, what we are talking about is approximately 20,000 crores of worth of money to be spent on the CSR initiatives. These are rough numbers. This may go up also, but this is a ballpark number. And a 20,000 crores of rupees can change the fortune of any particular district or any particular state, or per se, if the money is utilized in a proper way and with the in the right spirit, this can change the dimension of a country also. Now, off late, CSR and ESG are going hand in hand, but one need to understand that these are 2 different things. Now, what CSR is? CSR is a generally sustainable framework, which is mainly used by the corporates. And whereas ESG is a measurable sustainability assessment, which are very popular amongst the investors. And of the 2, ESG is the most emergent and talking point in the corporate as well as the in the investor community. So if I were to talk about corporate issues and issues in and around that, Rupanjana ji touched about on the audit piece, that audit as we speak is not compulsory, but this has been the talk of the town that CSR audit should be made compulsory for those companies to whom CSR spend is compulsory. So just to put the things in perspective, that as a group, when we the CSR made applicable in 2014-15, we probably are amongst the very few corporates who have been getting the CSR audit from the year 1 itself. That every year we get the audit done, or we get the CSR audit done for all those companies in which CSR is applicable. And at the outset, I must also give a disclaimer that whatever I'm going to say, these are my personal views. This got nothing to do with the corporate I'm employed or the Institute of Company Secretaries of India. So broadly, I'll say that CSR issues I'll divide into 6 or 7 broad categories. One is the applicability. Second is how much amount do we spend? How do you calculate that? Now, who will implement the project? What kind of projects can be undertaken? What are the disclosures to be made? And what is how the contribution can be made, and what is the impact assessment? Before I get into the issues in detail, we should understand that whenever we go on a journey, the path should be clear. If we clear about the rules, if we clear about the roadmap, the journey becomes relatively easier. All of us drive, so we understand that on a red light we need to stop, and the green light we need to move, and on the yellow light we need to be cautious about it. Now, but the same is not going with the CSR rules. On the one side, people say that it is good for the professionals because if the rules are so clear, then the professionals, practicing professionals, will have difficulty in getting the assignments. But to the other side, it becomes relatively easier for the corporates to implement the project, CSR projects and program in not only letter, but in spirit also. The rules have to be made clear so that we know what to do and how to do. So if I talk about applicability, though Amit and Rupanjana ji also touched about section 135 and rule 3.1 and 3.2. Rule 35.1 read with rule 35.5, sorry, section 135.1 read with section 35.5 clearly articulate that only those entities need to spend 2% of their average 3 years net profit, which are covered through subsection 1. If you have a net profit, or if the company meets the threshold of net profit, turnover, or net worth, as the case may be, then that corporate is required to spend 2% on the CSR activity or the projects. Rule 3.1 also clearly says that. However, rule 3.2 creates an ambiguity, saying that if continuous 3 years these criteria are not met, then you are not supposed to spend. Now, I think in this case, rule are overburdening or overpowering the section and the rule 3.1 itself. So it needs clarity. And is a high time that it should be clear to the corporate, saying that if rule 35.1 is not applicable, section 135.1 is, you're not meeting the threshold, then you're not required to spend any money. Charitable organization are also covered. Amit has touched it, so I'll not go into detailing of it. There is a new concept some of you might have heard of, is a corporate environment responsibility. Now the Ministry of Environment, Forest and Climate Change is what they're doing is that if you're undertaking any new project, or you are rebuilding the existing project or doing an expansion, then you're required to spend some percentage depending upon the capital outlay or the capital budget on the respective project. You're required to spend the amount percentage of that capital budget on the corporate environment responsibility. Now the question comes, is the money spent on corporate environment responsibility will also qualify as CSR for the corporate or not? Having said that, the rules which Ministry of Environment, Forest and Climate Changes has came out with is also ambiguous in some form or other. And the corporates and the professionals are divided into this, whether this should qualify as CSR or not, because one part of the rule says that if you are under obligation, under any rule, or in other words, if you are under statutory obligation to do some form of CSR or of any kind of corporate environment responsibility, then that should not qualify as CSR. So corporates have divided into this on whether this should qualify as CSR or not. Now, second is how much amount to be spent. We know that 2% amount is required to be 2% of the average net profit is required to be spent. Amit has already touched on this, that how it is to be calculated, 198 method of calculation. Now, interesting point, effective especially after the January 2021 amendment, which came in, which defined the ongoing project. Now, a company can undertake an ongoing project, which generally the horizon period is approximately max 4 years, current financial year plus 3 years. Now, what happens is that at the end of the current financial year, a corporate might have unspent amount, which is required to be parked in a separate unspent amount. Now, as a corporate, what we thought through is that this is a money which is lying idle. So why don't we transfer this money in a fixed deposit, and the money and the interest earned on that fixed deposit can also be contributed towards the CSR activities. Now, when we deliberated among the corporates and especially the banks were quite reluctant to put that money into a fixed deposit, saying that this is a special unspent account for CSR. So therefore, this money cannot be parked in fixed deposit. We took up this matter with the ministry. They very clearly articulated, they very clearly said that we have nowhere barred or mentioned in any of the rules saying that this money cannot be parked in fixed deposit for the time being till the time money is utilized. Having said that, when we took up the matter again with the banks, some of the banks are allowing fixed deposits, but I must say that most of the banks are not allowing parking of these unspent account in the fixed deposits as we speak. Now, the relatively related question is that what happens to the interest on such fixed deposits? Now, the professionals are divided onto this, saying that whether the interest earned on this fixed deposit should also be spent on CSR activities or not. My personal opinion is that yes, this the interest earned on fixed deposit less the income tax payable on this interest should be utilized only for the corporate CSR purpose only. Now, question is another question on the from an implementing standpoint comes is that if I have given, let's say, 10 crores to an implementing agency, and out of 10 crore, they could only spend 8 crore during the financial year. Now, there is no clarity as to whether they should refund 2 crores, they should keep it. Now, the obligation is on the company that whatever is the unspent amount, which is 2 crores of rupees, have to be transferred in an unspent account. Now, some rule says that there is in the FAQ it is mentioned that even if the corporate does not get the money back from the implementing agency, they need to deposit or transfer this fund of their own money into an unspent account. Now, this puts an additional burden on the corporate, saying that 2 crores are already lying with the unspent, already lying with the implementing agency. And on the contrary, 2 crores is required to be transferred in an unspent account of our own money. So this needs clarity from the ministry side. Now, another related question is that what happens if the implementing agency has done the work, the entire work, but having said that, they by the end of 31st of March, they could not raise the bill on the corporate, or because of ABC reason, finally the amount has not been transferred by the corporate to the implementing agency. So what happens on those situations? Though rule very clearly says that it is the money which is spent should only be considered. No, one may argue that money spent is is the hard cash which has been utilized, but the money spent can also be arguably countered, saying that if the project has been accomplished by the work done on the ground, then this whatever is the amount not in form of hard cash utilized, but if the implementing agency has done the groundwork and done the entire work, then that kind of work should also be considered as the money spent. Related question is that you must have read in the FAQs saying that if a corporate distributes the goods, then this is not considered as a CSR. Now, the high time that there are corporates who are who are distributing their goods, whether these are FMCG or a pharmaceutical companies which are distributing their goods to the public at large. So if these are done with a good cause for the CSR purpose, that should be allowed as a CSR spend. Now, next category of question is that who will actually implement the project? Now, here comes the issue of implementing agency. If you look at the tier 1 cities, you can easily find out the implementing agency who are doing the groundwork. Now, these tier 1 cities, most of them are also called the concrete jungles. So if one may look at that, the one side of the coin says that there is a real need of spending the money in these concrete jungles also. On the contrary, there are tier 2, tier 3 cities which also needs improvement or fundamental transformation by way of development of roads, education, security, and safety per se also. Now, as a corporate, what challenge we face is that you don't find a good implementing agency, especially for tier 2 and tier 3 cities. So what need to be done is that you need to depend on the tier 1 implementing agency, which somehow or other subcontract their work for tier 2 and tier 3 cities. So a few corporates have arguably taken a stand saying that this subcontracting is not allowed in a CSR. But my personal view is that yes, if you are keeping the monitoring process in place, this can be done. Now, another related question is related to the CSR1 of the implementing agency. Now, as if I'm an implementing agency and currently I have experience in education and let's say education only. Now, going forward, though parallelly I have been doing work on infrastructure also, but my experience in infrastructure are not 3 years. So while filing the CSR1, the only category I will mention is the education. Now, what may happen 2 years or 3 years down the line, saying that I also have experience now in infrastructure, safety, security, and any other fields. Now, CSR1 is not cannot be refilled again. So the Ministry of Corporate Affairs now need to redesign the form in such a way that an implementing agency can also file the CSR1 again when they add on to their experience in terms of other fields. Now, Patodia ji can also put a light on this. Now, what issues we come and we face is that when we assign a particular contract to an implementing agency, what we look at is a 12A and 80J is there or not. Now, typically, if I'm not wrong, if an ongoing project is given for a 4 years period, now 80G is a renewal every year. What may possible is that 2 years down the line, 3 years down the line, the implementing agency, the government may not renew their 80G certificate. So what happens on those situations? Because you already identified the implementing agency, you awarded the contract to them. Now the 80G does not get renewed, then you will have a difficulty in terms of the compliance of CSR provisions. Now, another related issue is that the CSR rule says that if a company has established any Section 8 company or a trust or a society, then a company can undertake the CSR project through that company or a trust or the security. Now, when they say implement, when the company has established that company or a trust, now establishment is not clarified. Now, whether I need to hold 1% of it, I need to hold 10%, 20%, 30%, there is no clarity. Do I need to control by way of shareholding or board structure? There is no clarity on this. So this piece also needs clarity. There are RPT issues also into this. Due to paucity of time, I'll not go into a detailing of it. Now, we understand that after January 21, there are two kinds of projects. One, we undertake the ongoing project, which is more than 1 year. Another is a short-term project, which we take it in 1 year. Now, rule says that normally in urban cities, which are concrete jungle, as I mentioned earlier, is that normally CSR projects are not doable in the development of urban cities, especially the infrastructure projects. But there are urban cities also requires CSR funds by way of a safety, because the safety is need of the hour in these tier 1 cities. Security, of late, the requirement of a crematorium, whether for the human beings or the animal, is also talk of the town. You need to set up the community halls, library. So these kind of projects implementation in the tier 1 cities, which are developed cities, requires clarity from a ministry science standpoint, saying that these are doable or not doable. Sorry. Now, another category is the disclosure standpoint. Now, there are multiple terms which are used, whether we talk about section, rules, or Schedule 3. If I were to talk about rule and a Schedule 3, rule says that whatever is the unspent amount need to be categorized or mentioned in one way. Now, what is interesting to note is that rules or the section use the word unspent, whereas Schedule 3 uses the term called shortfall. So whether the shortfall means the unspent or the other way around, so this needs clarity. Now, this is a high time since the corporates are finalizing the balance sheet and Schedule 3, this being the first year, a lot of corporates are facing these issues. Now, there is also an issue with regard to the contractual liability, as I mentioned earlier. If I have already obligated a contract wherein implement agency has done the work, but money has not been spent, rule says that this is not a CSR spend. Having said that, the Schedule 3 says that if you have provided for any amount with respect to the liability incurred by entering into a contractual obligation, this also has to be mentioned in Schedule 3 disclosures. Sorry. Now, what is interesting to note is that as a corporate, what we are doing is that if I'm supposed to spend 10 crores of rupees as 2% of the spend, what we are doing is that we are providing in the books 2.5 crores in every quarter. What may be possible is that since we are undertaking an ongoing project for which money would be spent in 1 or more years, though technically I'm providing in the books as 10 crores of rupees in the particular financial year, but that actual money would be spent in 2 or more financial years. So this is also a dichotomy in the financials of some of the corporates which they are facing. Now, contribution, Amit also spoke about, and Ranjeet also spoke about, saying that contribution to Prime Minister Relief Fund, such Ganga Bharat, and other projects is also a CSR. But contribution to state funds established by state governments are not covered, though they were there in the draft rules. So this is a high time that those should also be recognized. Ma'am also spoke about impact assessment, so I'll not go into a detailing of it, but I believe that impact assessment will also be a challenge, little challenge, especially for those situations wherein multiple corporates are involved in a single contract, or or in a single projects which are being undertaken by the corporates. So I'll take a pause here. So maybe we can take up the questions.
Thank you so much, sir. Thank you so much for your nice celebration. In case anybody wants to ask some questions, they can unmute themselves and ask.
Pankaj sir, this is Pracheta. The question is, if the board agrees for an amount which is more than 2%, that is a budgeted amount, and when the project actually happens, it is coming less than the budgeted value, but more than the statutory limit of 2%. Is there a compliance or a non-compliance? Do we still have to transfer anything to unspent CSR account? Because this is what we have budgeted in my board resolution.
So Prachita ji, I think if I've understood your question, you are saying that suppose your 2% amount was 10 crores of rupees, and whereas you undertaken a project for 12 crores of rupees. So
Yes.
the board has passed a resolution for 12 crores of rupees. So what happens if the 2 crores which is additional is unspent, whereas 10 crores have been spent, which is a statutory obligation?
Correct.
Have I understood right?
Yes, yes.
Okay. So my take on that, since you've already spent the 10 crores of rupees, which is a statutory obligation of 2%, then you're not supposed to transfer the remaining 2 crores on the unspent amount. But having said that, as a good governance practice, my advice on that would be saying that since the board has undertaken and especially passed the resolution for this entire 12 crore, so you should, as a good governance, park this 2 crores separately. But having said that, not a statutory obligation only.
Or just to add one more point, what Pankaj has specified, there can be two situations. One situation is that board has spent 10 and they don't have any intention further to spend balance amount in the subsequent year. So if that is the case, then in that case, the board can again revise their resolution in the subsequent meeting in current date and say that whatever has been already been spent, that will be considered as CSR for the year and no further amount is required to be spent. Otherwise, what Pankaj is saying, I think I'll tend to agree with that. And as a good governance practice, though there is no legal obligation that you are required to transfer it to a separate bank account, it may be done as a just as a good governance practice, but only in those situations where your management has the intention to spend in subsequent year. Otherwise, it is a board decision. Board decision can always be revised at any subsequent point, provided it is not barred by the law, because it is beyond 2%. So law will not come in your way to revise the limit appropriately.
I have one thing to add to that, in addition to what Pankaj and Amit said. Now, it all depends on whether your project is an ongoing project or non-ongoing project also. Regard may also be had to that, because if it is an ongoing project, irrespective of whether it is good governance or compliance, it's always a good idea, because the project is ongoing and you will still need a fund and you have committed to that project. It is definitely important for the company's point of view to spend the residual amount, because that is rather than give up that project, because that project is midway, I bet. So that also is important consideration.
The project is completed and you don't.
Yeah, so if the project is completed, then it remains with you. What remains with you is a question of good governance. If you want to be a good governance company, then definitely, as they are saying, then you have to transfer. Otherwise, legally, it is not non-compliance.
Yeah.
Any more questions from the house?
Nobody has a question, can I ask? The CSR2 for the coming years, how was it being planned? Do we have to file with AOC4? Is it going to revise AOC4, or is it again going to be the same web form which we have to file along after we file AOC4? Is there any clarification of that? Or
so far, ministry has considered it as a annexure to AOC4 itself. Maybe in times to come, perhaps it will become a part of AOC4 itself. But so far, the way it has been filed for the year 2021, it will be filed same way for 2022 also, unless ministry comes out with something further in a clarification. As on date, the situation is like that only.
And so the annexure to AOC4 means what? I have to file, upload AOC4 and immediately upload CSR e-form? Or,
you can upload AOC4 at any point of time, whatever is your due date. But for filing of CSR2 for 2022, the deadline is 31st March 2023.
Again, I'll say this is a classical example of multiple disclosures on the same topic. One is that anyway, you're asking for the annual report, CSR annual report, the schedule 3, and on top of this one. Initially, when the CSR2 form came, we thought that the ministry is doing it for the financial year 2021 only, because we already filed that point of time. We had already filed AOC4.
Correct.
But now making it again compulsory for 21-22 also, honestly, I couldn't understand the rationale for it. Since the point that anyway, most of the corporates also have to file the AOC4, this could have been made part of the AOC4 itself.
So, sir, I believe that the deliberation was nice and nobody has further questions. So, I would first of all thank you, all the speakers, Ramesh ji, Amit ji, Rupanjana ji, and Pankaj ji, for sparing time for us and enlightening us. And I apologize for reminding of time, because it is just for the interest of all speaker and audience that we still be on time. And I request Seva Sutra to organize a seminar which has more time, so that we can get a detailed discussion. And I thank all the participants and Seva Sutra for organizing this session. Thank you, and hope to get connected with you on a later point of time. Thank you so much, sir.
Thank you, Sumit.
Thank you, Sumit.
Thank you. Thank
So
you.
we'll end the meeting, sir. Thank you so
you.
much. Good night.
Thank you.